Stock prices have risen dramatically since the outbreak of the epidemic began. A combination of low borrowing rates, an increase in retail trading, and government stimulus checks has propelled stock values to unprecedented levels. Startups that were making their maiden forays into the public market raised more money in 2020 than they had ever raised before. And then came 2021, which raised even more money than last year and doubled that number. This has raised some questions, and shareholders are looking towards Cathie Wood's investment strategy. What is her investment strategy? What makes her believe that the market is not in a bubble? What makes Wood so optimistic about Tesla? What are her forecasts for Lucid and Rivian, and how does she feel about them? Stick around till the end of the video to know the answer to these questions. Welcome back to New Vehicle Media, your go-to channel for EV stock. Quick reminder that subscribing's free and liking the video helps YouTube suggest similar content. Comments are loved and featured in upcoming videos. It's been speculated that we may be seeing another dot-com bubble on the scale of the late 1990s. Cathie Wood, the legendary stock picker famed for making risky bets on innovative technology firms, dismisses the resemblance, claiming that we do not operate within the norms of established benchmarks. She suggested that the market may be experiencing a bubble, but that it has nothing to do with tech stocks. Instead, she noted, it's the investments that we generally think of as safe bets that are the most profitable. If you're looking for a bullish voice on the disruptive industry stock, Cathie Wood has been one of the largest and most vociferous supporters in recent years. ARK Investment Management CEO has been a frequent guest on different financial media sources, praising the firm and its stock and urging investors to buy it. In the following clip, Wood outlines her firm's investment strategy.
Our focus is solely on disruptive innovation. We are not a generalist portfolio team. We are focused on the five platforms, innovation platforms, and 14 underlying technologies. Our analyst responsibilities are broken out by those technologies. They are specialists when it comes to the technologies and generalists when it comes to the sectors.
Cathie Wood performed a number of media appearances during the first week of December in order to build up interest in stocks such as Tesla and Twitter, among other firms. Yes, of course, there are additional reasons at play. After all, the billionaire is invested in these ideals via her actively managed exchange-traded funds. In the case of Twitter, Wood had also taken advantage of the recent market downturn to increase her stake and purchase further shares in the social media firm. Cathie Wood is on the lookout for disruptive stocks, and not just any disruptive stocks. She's particularly taken with the EV sector stock, and more specifically, with the autonomous engineering of the EV sector. And it's for this reason that the billionaire investor has long been recognized for being positive on Tesla even during the company's formative years. To understand why Cathie Wood is so confident in Tesla, watch the following clip interview with Barron's.
We believe that Tesla's decision to design its own artificial intelligence chip was the real breakthrough here. Now, they designed it, and the specs were out in 2018. Since then, they have been collecting billions and billions of miles of data. Actually, I shouldn't say they. Their robots, like my Model 3, have been collecting data for them for these last few years. And what we're really interested in are the corner cases. Now, the pilot test for full self-driving, Tesla's pilot test, has just started, and it includes the safest Tesla drivers out there. So they had to get a 98 or to 100 on a score. And what we've learned so far from them is that when it works, it's a dream. It's unbelievable. When it doesn't work, it's terrifying, a near-death experience. And so these very safe drivers are guiding Tesla. So every time there is a miss, whatever that miss is, and very often the miss will simply be stopping because of uncertainty. they hit a button, and that video goes back to Tesla so they can learn from their mistakes. So we've got passionate users of Tesla's vehicles out there helping them with this autonomous effort. And we do believe that they will perfect it over time, and that within a year, more of us will have had an experience in an autonomous vehicle.
For the electric car manufacturer Tesla, Wood defended her incredibly high long-term target price of $3,000. As a result of the price, she believes there's a 50% probability that the company's goal of autonomous driving will be succeeded. When it comes to battery technology and automation, Tesla is miles ahead of the competition and should be able to capture a significant portion of the market for electric cars in the near future. In Wood's opinion, Tesla's stock is still quote-unquote undervalued at its present valuation. For the Titan's shares, though, there are significant hurdles to contend with. Elon Musk said on Twitter that he was considering quitting his current positions and focusing only on his influencer work in the future. In addition, Elon has been on a selling spree with Tesla's shares recently, which has caused investors to fear that the company has become overpriced as a result. Cathie, on the other hand, said that this is not the case.
I'm not concerned, because what he's doing is he wants to exercise his options, and there will be some tax consequences associated with his managing his wealth. So he's doing this to pay those tax bills, and he's making a very strong point of it in his tweets.
One thing is certain, Cathie is quite positive on Tesla. But what about the company's competitors? What about Rivian and Lucid, who were formerly regarded as the market's up-and-coming leaders in their respective niches? Her investment plan, once again, provides the solution. In fact, she is positive on Tesla stock, in part because she believes that the electric vehicle maker would ultimately use AI to construct robo-taxis. The ability to operate autonomously is one of the most certain ways in which electric cars will become commoditized. Autonomous taxis, according to Wood, will be the future. That's why she said, "All we need a taxi to do is get us from point A to point B as quickly and safely as possible." And after that, she provided an explanation as to why she did not contemplate investing in both Rivian and Lucid. Wood said, "If we saw Lucid and Rivian getting into the autonomous world, especially Rivian, given its relationship with Amazon, that might be more interesting." That does not imply, however, that she does not believe any of these businesses will be successful. In fact, Wood predicts that both of these companies will be successful in their respective niches. The only reason she isn't investing in the stock is because of a lack of complete autonomous technology. Wood may decide to include both of these businesses in her portfolio once they have more products on the road and have collected enough data to feature its own autonomous driving capability. But I'm interested in hearing what you have to say. Do you believe that Tesla is aiming for a majority share of the market in the near future? Second, do you believe that the competition will catch up to Tesla in terms of autonomous technology? And if so, who do you believe will have the greatest chance of doing so? Let us know what you think by leaving a comment down below. Joseph Suarez is all in with Lucid. He's been following from day one and absolutely agrees that Lucid has the right talent in the industry and Mr. Rawlinson is a genius. That should wrap things up for today. Keep in mind that subscribing's still free and liking helps YouTube recognize your preferences. Thanks for taking the time to watch, and I look forward to seeing you in the next one.